is December the 6th, and we're going in. I've already placed some trades for Monday, this Tuesday, so let's go in and see what we got going on here. If you're familiar with the channel, if you subscribe, if you like, then you know that I trade very few naked calls and puts sometimes, but mostly I practice the wheel strategy on small accounts, building them up and just having fun paying bills off small accounts. You know what I'm saying? You got a card note you want to pay? Do this. You know what I'm saying? If you got you know what I'm saying, you got to pay for your kids' karate class, follow this. You know, trust me. You know, this little extra $300-400 a month, $500 a month, depending on your account size. Hey man, it works. So, for example, I put 10 contracts on yesterday on SPY, and you can see from, let me pull up some stuff here. Oh, there is the tools. And as you can see here, I did 10 buys and 10 sells, right? Okay, I bought 10 at 452 put, and I sold at 453 as protective put, as I like to call it. Okay, right now 24 hours basically, you can see my total return is up. Obviously this is a bear strategy. I believe that SPY is going to be going up. So obviously I put up the collateral of $1,000, as you can see, and today's return is 40, and the total return in one day, and this was due to expire today. So as you can see, I basically been doing day after day after day after day. So now what I'm going to do is go in here and buy it back, and you know, for the little difference. Now first I'm going to back up. Uh-oh, sorry about that. Let's go in here. Yeah. Okay. So, yeah. Mhm. Yeah, I took a risky move on a call right there, and you can see how that played out for me. That's why I say, man, those calls and stuff, mm-mm-mm. It go bad on you and stuff, man. Man, don't be worth it, man. I'd rather just take my little couple hundreds of dollars here a month and get on. You know what I'm saying? So, at any rate, yeah. So here we go. Let's look at what I did. Here's the one expired today, SPY. Here's my position. I sold 10. You can tell right there. Average of $8 each. So that makes it an $80 premium that they paid me. Okay, so now the total return is 70. So to me, it's a good time to buy it back. I don't have to wait till market conditions change. The only thing I'm about to pay back to them is $10. So I'm gonna press a close. Okay. Now it's asking me how many contracts do I want to sell. I'm selling 10 because that's how many I had. There's no need to let any run, because at the end of the day, for what? At the price, you can see they saying a low likely fill up it at $1. I'm not taking no phone calls right now. That is. And this, as you can see, that's it right there. And they're saying if you want to buy it back, you can buy it back for, basically a penny, or if you want to say $1, because you talk about 100 shares, so that would be $1. So if I'm doing 10 of those, that's $10, right? So they're saying it's a low likelihood that I'll get it filled at that price. So that I might have to buy it back at $2. So let's check it out. Let's see if I get a high likely fill, 0.02, and see what high likely fill. Okay. So technically, really, the difference between that is literally $10. So like for me, if I do that, then what would have been $80 is going to be $60 now. But if I do it at 70, then it would be, if I do it at $1, it'd be $70. So remember, the premium that I got paid was $8 per share, and that's 100 shares per contract, so that's $80, right? So right now I'm buying it back, and when you buy it back, you got to spend the money that you had got as the premium up front. You got to pay some of that back to get it back to close it, right? Okay. Right now it's willing to close it at $2 per share, which which in my case is 2 cents per share, which in my case would be $2, right? Okay, so excuse me, I apologize. That'd be $20. Um, so what I'm trying to do is right now decide: do I want to just leave it at the 1 and let it close, or try to close it at 2 early and take my $60 and get up out of here? So that's the question. I think what I'm going to do is close half of them. Since they want to be funny about the $1, I'm going to close half of them right now. Probably half of them, 5 of them at $2, right? 0.02. Yeah. And so see how fast that gets filled. Yeah, that got filled really fast. So I believe I did a smart thing. I only did half of them just to check to see how fast it got filled. So for 5 of those contracts, I basically got $60. I got $6 each. So that's $30 basically. And as you can see, I got my collateral released. So half of it, I did 10 contracts. At first it was $1,000 collateral. Now, since I bought 5 of them back, then at an estimated cost, where did I get this 30 cents? That's these fees they put on top of it. So now they released half of my collateral, which is $500. That's the bid ask. Be honest with you, one is in between. So what I'm going to do is turn right around and see. So now I sold those. I still got $35 left. So I still got other 5 contracts left. You can see right there. Right now the current price is $1. I think I really could have got away with just doing them all at $1, but I just wanted to test them. I probably should have just tested it with just one, just to see. But at any rate, I'm going to go ahead and sell the rest of this and get the other $35. And let's see how fast we can close it out. And close it right there. Let's give you guys a demonstration. 5 contracts at $1. There we go. They saying a low likely fill. I'm gonna pay. Gonna release. My 5 contracts are available. It's gonna release that. Here's my 5 contracts at the price of $1 of each. Estimated cost is $530. Let's release that. Let's close it. Let's close it. Let's see. See how fast it'll sell. And so this is, and because of this, and actually $1 is in the middle of it right in the middle of the spread. So honestly, it really is not worthless yet. it's still worth a little something, but by the time half of the day goes by, this will be damn near worthless. So, that is wait a minute, there's one caveat. If SPY don't turn around, remember, it could all of a sudden just start falling real bad. Then go into bad territory, start losing money. That's why I say sometimes it's important to just go ahead, close it out, and take your money. You know what I mean? Yeah, I got $10 less. But you know what? I got $60 for one day for putting up $1,000 collateral. Are you crazy? Like, where did it get? I mean, this is just one trade. So, just think about that. And I might even put on another trade just to show you. I'm about to put on another trade no matter what, because that's what I'm about to do. I mean, literally, like, I'm collecting premium every day. You're talking about, imagine you doing that every day, $50, $60 every day. I mean, shit, it's $250 a week. Let's say you lose one, you still made $200 a week. So, as long as you close that other trade fast, as soon as you see it losing money, just get up out of there. But anyway, that's that. This hasn't closed yet. So when I see it playing with me like that, I could wait. But one thing I learned is that that you're supposed to be gone. Now, what if SPY, which is the current price right here, what if it just start falling? 457, 456, 455. All of a sudden, this premium, this return gonna start falling right with it. You see what I'm saying? And I believe it's gonna fall. Look at it. See? You see that? You see that? Look what it's doing. It's gonna try to fall. And so because it already opened up. I saw SPY open up earlier, high, and a high. So if we go to SPY, we can see. You see? It's only doing what it's supposed to do. You see that? So now it's time to go. Before we see, this is why I say you just got to get out. But luckily, see, we're on. This is the beauty of doing one of these trades so close to expiration, one day of expiration, because what ends up happening is you end up it's so hard for it to go against you. It's got to go so far against you in order for you to start losing money, because it's finna expire today. So, right now, had this been like 3 days out, 5 days out, or 2 weeks out, that little bit of movement of SPY doing would have made a big difference on my bottom line. But right now, because I'm so close to expiration, it has to catch up so far in order to, and it's falling too, 457.88. You see that? So anyway, let's get up out of here. Actually, I gotta go close the other one out because I have a trade in there. So let's go back here. There it is right there. Remember, you just gotta close these. You gotta cancel this order, because otherwise it's gonna keep saying that you don't have enough to trade. So I'm gonna replace this order, and I'm just gonna go with the asking, and just go ahead and get the 2. So my total profit would have been $60. It's all good. What I'm mad for? You know what I'm saying? What I'm mad for? Nothing, man. I'm cool. It's should fill real fast. Filled. Boom. Gone. $60, 24 hours, $1,000 collateral. That's how you do a put credit spread on SPY. And I'm finna do another one. Hey guys, it's Mr. Cozmik's Cozmik Training Academy. Back in with another banger. December the 6th. As you can see, ain't no cap in my rap. December 6th, 2023. That's a put credit spread, man. $60, $1,000 collateral. Can you put up $1,000 right now and just do this every day? Come on, man. Don't say you can't. That's your card note. Easy. That's easily your card note. You know what I'm saying? You do this even if you only do it 3 times a week. And you figure if you make $50, $150, that's $600 a month. Come on, man. Figure that. Gotta make sense. I'll holler at y'all, man. Get at me, man. Hey, join our academy. If you want to get an investment club, let me know. Send me a message. Send me an email. Like and subscribe, man. Hit that like button, man.